Shubharadas. Welcome to the Midweek with India Charts. Today we are fired up to answer some very curious questions you must have all week through your mind. And we have Joe Bora with us to answer that. How are you doing, Jay?
I'm great. How are you?
I'm doing very good, Jay. Thank you so much. So, Jay, starting off with the first question, the CPI data completely changed the mood of the market, and we have seen a big rally in equity markets. The dollar index has fallen, due to which gold and silver have done well. What is your take on that, Jay? What's your view? And have the macro risks subsided, and are we in for good times?
Right. So actually, yesterday's data of CPI has turned around things significantly. Prior to that, people were fearing that, we can see some corrections, etc. And, we'll come to that in a while. But, just to give you the context, the CPI data and the core CPI data both came a little lower than what was expected. And that actually fueled the rally in the market. Okay. Now, I think one of the major reasons was that many of the participants in the market were actually, heavily short in the market. Okay. So, despite data being marginally below the expectation, but the kind of run up we had seen the other day, that was huge. Like Russell index was up almost around 4-5%. That is like crazy. I haven't seen such wild moves in quite a while now. But yes, broadly, and I will also show you the chart, which we had actually published, and stating that a lot of people are short in the US indices and there is extreme pessimism over there. So over there, a bounce was due. Okay. Now, what has really changed, in this bounce, that we'll discuss. But yes, one thing which is happening in the market right now is that the inflation seems to be cooling off. Okay. But I will still say that it is not cooling down at the pace which the Fed might want to see. Okay, because the Fed inflation target is 2%, and the core inflation is basically far off from that point. So in that sense, still there is a lot of ground to cover. Now, there is a disconnect between the market now there is some disconnect between what the Fed is telling and what the market is anticipating. Okay. Because the Fed is saying that they want to focus on the 2% inflation target in the medium to long term. And for that, they still have a lot of ground to cover. But after this CPI data came, the 2-year, the 10-year, they fell, almost 3 to 4 or even 5%. Okay. And that was a huge cut. And now the market is actually penciling in, I think, 4 or 5 rate cuts, in the coming year, whereas the Fed is still saying that they won't cut the rates. Okay. So that is the disconnect between what Fed is saying and what the market is anticipating, which means that the market is saying that the Fed may not go towards the 2%, inflation target, and they will have to cut the rates in between. Now, the whole catch over here is that, while people are saying that the US economy is resilient due to government spending, etc., etc., okay, but what is happening right now is that because the US government spending is very strong, okay, that is leading to growth in the, the US economy, but that is again leading to inflation, okay, which actually the Fed doesn't want. So if that is leading to inflation, okay, so then that means that we are going to get a higher inflation for a long, for a long period of time, because the economic conditions in the US is strong. Okay, now that will eventually be bad for the market, because that would mean that we are trying, the Fed will try to keep the interest rate at higher level for a long period of time. Okay. And higher interest rate for a long period of time will probably be, not good for the market. That is because, so far, frankly, I was anticipating that there will be a PE derating, because what happens is that when the interest rate goes higher, your cost of opportunity, or basically your risk-free rate, goes up. Okay. So for which the equity has to generate a far more superior return okay, for it to be attractive. Now, what is happening right now is that the earnings in the US indices are flat, okay, while the interest rate has gone up. So what is happening is that more and more equities are becoming unattractive because, on the one side, you have the yields which are giving you risk-free rate of 5-6%. I mean, around 5% or so. Okay. And at the other hand, you have the US indices, I mean, the S&P 500 companies, which have actually seen a degrowth in their EPS. So what is happening right now is that the PE of the S&P 500 is expanding. And this is frankly something I did not anticipate. Okay. I thought that there will be a PE derating because of the higher interest rate, but so far that has not played out. So does that mean that it doesn't play out in the future? I mean, it is hard to say, but the whole idea is that only that if the inflation is not going away in a hurry, okay, I think that eventually there can be a risk to the PE of S&P 500 or basically the Nasdaq and those magnificent 7 companies, which we call it. Okay, so that is where the risk is from a medium term perspective. Okay, now let me share my screen and show you what is happening in the short term. Okay, so yeah, if you see over here, basically just today Rohit sir had updated this chart, and we'll come to the Indian indices later on. But first, when you see the volume put call ratio of the US market, okay, that is basically the entire US indices. So you can see that whenever this ratio goes higher, okay, it typically leads to a bottom in the equity market in the short term. You can see it over here as well. Okay, you can see it over here as well. And even in the recent low, which the US indices made, I mean, if you, in this case, this is S&P 500, the low it made over here, that was leading to a very high reading on the volume put call ratio, which means that more and more people are actually buying puts, and the activity of the I mean, the volumes in the put is a lot more than that on the calls, which means that people are probably buying it and they are in panic, right? So this has again led to the counter trend move. Now, like I said earlier, the positioning was short. I mean, they were, kind of extremely bearish on the US indices. And that is where we have seen a massive pop yesterday after the CPI data. And it is not that, the CPI data was, completely unexpected or something like that. Like the reading was very, very low than the expectation, but it was just a 0.1% lower than the estimate, and the market shot up. And this, I think, was possibly due to the positioning. Now, the CPI data yesterday has led to a sharp decline, basically in the dollar index. Okay, so if we see the dollar index, sorry. Yeah, so if we see the dollar index over here, it has actually retraced. Wait, let me clear the drawings. Yeah. So if you see the dollar index, it has basically retraced 50% of the entire decline. And so far, it is trading around this averages. So if it breaks and, starts sustaining below 104, then it can get into trouble. And if the dollar index, obviously, if it goes down and, if it is weaker, then it is actually good for the equities in general, and also gold and silver. So, what has happened is that in this recent correction, which we have seen, okay, so gold and silver have actually behaved very nicely. See, earlier what was happening was that see, this is silver ka spot chart. Okay, so earlier what was happening was that when silver was giving a nice move as well, in the following correction, it used to give up a lot. Okay, and this we could see it every time. So every time there was this hope that it will turn around, but that was not happening. But recently what has happened is that we have seen a 9-wave rise in the silver. Okay, and more importantly, in this recent correction which we saw, it just retraced 61.8% of the entire rise, and now it is again taking off. Okay, so all this while it was making lower high, lower lows. Now this is probably the first time it may end up making higher top lower highs and higher highs. Okay. And if that happens, then, that can be a good sign for the silver in the days to come. And also in terms of chart patterns, it is, kind of forming an inverse HNS pattern, and which basically has bullish implications on the, in terms of price action. So I think if we look at the breakout point, the breakout point is, say, somewhere around $23.71 on the spot chart, okay, on the spot silver. So that's where, if it breaks on the upside, then, there can be a very good move that can be expected in silver. And when you look at the gold index, okay, which is XAU USD. So over here also what happened was that there was a nice rise and then there was a pullback towards the averages, and now again it is trying to pick up. Okay, so the high of gold is very important to break on the upside, because this decline actually looks like a 5-wave decline on the daily chart, but this actually appears to be corrective. And if the way silver is behaving is true, okay, and it is starting its next leg on the upside, then most probably gold might also do so. Okay, in which case this 5-wave decline which we are seeing on the daily chart might not really be true. Okay, and it will eventually take off. But the confirmation of that would be to break above the previous high, which is around $2,009. Okay, once it does that, then we have this confirmation that this is not a 5-wave decline. And because this rise was an impulse, which is 1, 2, 3, 4, 5, 6, 7, 8, and 9 legs. 9 legs are basically an impulse move. An impulse move usually indicates the direction of the trend. Since the impulse move had occurred on the upside, it means that the direction is on the upside, at least in the near future. Okay, so that is on the gold. And just coming back to the S&P 500 index, what has happened was that when the trend line broke, I think we had discussed this earlier. So when this trend line broke, there was a risk of a correction, but now it has come back well above the trend line, but it is still overlapping structure, which means the highs and the lows are overlapping. This means that it is either 1, 2, 1, 2, and a bigger 3 is starting, or else it might be that this rise was W, then this is X, this is Y, this is X, and now this is Z that is going on. And this can typically happen in basically complex corrective pattern. Okay, given the way the macro backdrop is, the counts which indicates a corrective pullback looks a lot more appropriate at this point of time. But obviously we are watching the data, and as in when it unfolds, we will have a clear view. But at least in the near term, one thing is clear, that this ratio typically, it bottoms out, say, somewhere around 0.9 or 0.87 or so, at least in the near term. And this ratio is still at 1.10. So it has still some legs on the downside, which means that if this ratio goes down, then typically the markets in the US indices should tend to rise higher. Okay, so basically this indicator is telling us that at least in the near term, the upside in the S&P 500 index might not be done. Okay, which means that it can have a positive momentum in the near term. So yes, so broadly what is happening is that the dollar could be weaker in the days to come, and the equity, gold and silver, basically the precious commodity and equities, that should probably do well in the days to come.
Okay. Well, that was very clearly explained, Jay. Thank you so much for that. Also, I remember, Jay, in our last discussion, you had mentioned that sentiment readings are oversold, and this can lead to a bounce in the Indian indices. Is the pullback rally in the Nifty index complete? And if so, what do we make of the intermarket divergence between the Nifty and the small and the mid-cap index, which has have new highs, Jay?
Right. So yes, unfortunately, last week we couldn't do midweek, and that is because, we were in this process of making new screens. So basically last week we went live with summary of the fundamentals, valuations in the fundamental, where we have almost 12 years of data. So that is something we have went live with. And the other thing, very important announcement, is that we have also gone live with the futures module. Okay. So actually, we were going through this module and we were checking the data rigorously last week, and that is why we could not record it. So once again, for all the viewers, we have we have this week gone live with the futures data, and also, like I said, the valuations in fundamental. So I hope you all find it useful, and there are a lot of things that you can explore over here. Soon we will also be taking webinars so that people understand how this system works, and how basically the future page is designed, and how to make best use of that. So obviously we'll come up with that webinar also very soon. So yes, so coming back to your question, when we look at the sentiment indicators, so I think it was last week when we had a discussion, and
That's right.
we were somewhere around this point. Okay, because if we see the calendar, so this is first of November we would have done the midweek. So at that point of time we were somewhere around this point. Okay, so what was happening was that many of our indicators were showing oversold conditions, and Nifty was trying to come out from that oversold condition. Okay, and one important thing that we had also highlighted was that when we look at the Nifty index specifically, so Nifty index was at a very crucial support level because it was trading at this blue line, and from there it was just bouncing back. Okay. So we had mentioned that if this blue line is not broken on the upside, there can be a good pullback that we can see. So originally, we were thinking of a pullback up to 19,450 and at the max 19,700. Okay, which we are almost there right now. Now, the reason why we are seeing 19,450 and 19,700 was because, one was this trend line breakdown, which we had seen, which actually looked like a head and shoulder patterns. Okay. So over here, Nifty did resist for a while, but today it has broken decisively. So I think the next level that we are watching very closely is basically 19,700. Okay. Which is around the point which we have touched today. And also there is, when we do some wave counts over here, basically this is W, then this is wave A, this is wave B, and this is wave C of Y. Okay, this is basically a complex correction. So for that, if we see the equality level, it comes to somewhere around 19,850. So that is why in the near term, 19,700 to 19,850 is the level that we are watching out very closely. Okay. But at this point of time, we cannot really rule out of a new high as well. Now, the reason why I'm saying new high, because of the sentiment data. So, it will raise many people's eyebrow, but, when we are looking at the data, it is telling us that this pullback has more legs purely because one is this indicator. This thing, which is FII's positioning. So this is what, Rohit sir also mentioned in the morning. Like you see over here, when this reading was oversold, we saw a very big rally. Okay. This reading got oversold last week only, while we were discussing in the midweek. The whole question was that whether we see a pullback rally from here or will it go down towards that previous level, which was of minus 190, and only then it will turn around. So that was the discussion at that point of time. But once the moving averages broke on the upside, that's where we took a stance that we are in a pullback mode. Now, ideally, we would have thought that around 19,700 or so, if this was just a pullback, okay, then FIIs would have cut a major short position. But what has happened is that despite 800 points bounce, we haven't seen FIIs cutting their position, okay, which means that there is still a scope of a short covering rally. And that is why, we are open to the idea that the Nifty index may not only, retest the previous high, which was somewhere around 20,200, but it can also rise higher, and, it can touch this upper trend line, which is, I think, somewhere around 20,800 or so in the, slightly more short, I mean, say from 15 days to 1 month kind of time horizon. That can definitely happen. Okay. So that is where we are actually watching very closely what the FIs are doing. Okay. And one indicator that we are watching very closely. And apart from that, what was happening was that even if you see the put call ratio, the open interest one, okay, I mean the PCR open interest wise, and which is smoothened with the 9-day, over here also it got into an oversold zone. Okay. And you can see from there has been a spike in the Nifty index as well. I mean, it has risen higher from that point once this oversold zone was tested. So now this indicator does show that we have seen a good amount of pullback. Okay. But again, it has a lot more room on the upside, basically to go till 1 or 1.1 as well. Okay. So if that happens, then again, it can lead to some sort of up move, some further up move in the Nifty index. Then if we look the other index, that is basically the breadth of the market, you see, has again come back towards this first line. Okay. Which is, kind of an oversold zone. And in the past, we have seen that if we see such oversold conditions, it does lead to a meaningful pullback in the coming days. So over here also, we had seen the 20-day basically advanced decline ratio going down and touching the oversold zone. Okay. So from there, this breadth is now again starting to pick up, but again, we'll watch very closely how this behaves. And also one of the very other important indicators, like the diffusion index. So over here also, what had happened was that, the number of stocks which are below the 20-day average, that had hit an oversold zone. Okay. Which was again indicating that there could be a bounce. And also the RMI, basically the number of stocks which are in RMI buy, even that had hit an oversold zone. Okay. So all these things were coinciding at the same point around 18,900 level. And like I said, 18,900 level was basically the 40-week exponential average for the Nifty index. Okay. So all sentiment indicators at, indicating extreme bearishness in the short term, and Nifty being at an important support level, that has led to a bounce in the Nifty index. Okay. But again, like when we see this when we see this sentiment indicators, it still doesn't suggest that the pullback rally will be over yet. Okay. And that is why, we are watching each and every indicator, almost every day. Okay. And we are seeing if there can be a risk of a rally fizzling out or no. So, just to sum it up, from the medium to long term perspective, there are still risks that we see from the macro perspective. Okay. But what is happening is that in the short term, many of the derivative data, breadth and everything, they suggest that we are kind of in an oversold zone. Okay. So for which in the short term, the trend looks positive. Okay, because all this bearish readings which we had just discussed right now, those all need to correct. Somewhere some of the readings have corrected. Okay. And they have come to an okay sort of point, wherein basically from the oversold zone, they have bounced back. But there are few indicators which are still suggesting that, the bounce could still be on. Okay. So this was on the first Nifty part. Now, when we look at the Nifty small and the mid cap index, okay, over there, the most interesting thing that is happening is that, this was basically wave 1, this was wave 2, this entire rise was wave 3. Okay. And we just got a very short wave 4 correction. Okay. And now it is in wave 5. Now, the interesting part is that when we look at the Nifty small cap index, okay, which is Nifty. Yeah, when we look at the Nifty small cap index, again, it has the same setup that this was wave 1, this was wave 2, this was wave 3, this was wave 4, and now this is wave 5, right? So within that, when we look at the daily chart, okay, again, on a very smaller, on the daily time frame, you can see that this is 1, 2, 3, 4, 5. Okay. So then now the question arises that can this be a 5-wave rise of wave 5 and then it complete the entire rise and then it corrects, or there will be further subdivision in wave 5? So at this point of time, we don't have an answer. Okay. Basically, we will wait for this averages to break to give us that clue. Okay, if wave 5 is not going to extend further, then this averages should break whenever the next correction starts. Okay, but in the next correction, if the averages are not broken, okay, then there is a chance that this wave 5 which we are seeing right now in the small cap index, that can further subdivide, and if that happens, then that could be few weeks or few months of up move that can happen. Okay, so we are keeping all the options open at this point of time. Okay, and we are basically watching the data each day if there is any change or no that is happening. Okay, so over here, broadly to put it, like I mentioned earlier as well, there are macro risks which are there right now. Okay, but the thing is that due to the positioning which we are seeing in the futures market in the US as well as in the Indian indices, this is giving us a hint that there could be some more upside in the US indices as well as in the Indian indices in the near term. Okay, whether this up move translates into a bigger upcycle, altogether, is something that we are not sure at this point of time. Okay, and we want to wait for some more confirmation on either side. Okay, कि अगर वो bearish view के लिए जो भी macro points है which are not supporting right now, we would want that to subside. Okay, or we want some confirmation that the up move that we have seen from the recent low is ending. Okay, so we are in a wait and watch mode. Okay, and primarily the short term trend is bullish. Okay, that is what we are thinking at this point of time. And in the near term, from the macro perspective, there are too many moving variables at this point of time, and which is very hard to predict what will trigger when. Okay, so that is why right now in the short term we are going with the trend, and in the short term the trend is higher. Okay, until we get any confirmation, like the break of averages or 61.8% of the entire rise breaking, something of that sort. If that happens, that will change probably our near term view. Okay, and we will think that is the pullback or the rise which we were expecting, has that completed or not. Okay. So yes, so broadly that is our thoughts on the Indian markets and the US indices.
Okay, wonderful. Well, Jay, that was very well explained. Thank you so much for that. For those of you who are more keen on knowing Strike and its lovely new features, the summary of the valuations and fundamental and futures data, I will leave a link for you down there in the description. Click on the link. It's a lovely opportunity right now because you get a free trial, and just click on the link, sign up, and have a look at Strike and have the golden data on your fingertips. Okay. And while you're at here, guys, do click on the subscription for Indiacharts. We come up with very regular videos, and catch up with us next week with midweek with Indiacharts with Jay and me, Shilpa. Thank you so much, Jay, for this wonderful session. Take care of yourself.
Thank you.
Thank you.